Hello, YouTube, it's your boy, the Crazy Trader, and I'm here again with your favorite stock review. Like I always say, scared money don't make no money, and you always gotta risk it to get the biscuit. Officially, guys, officially, we are in correction territory. The market is in a correction. There's nothing you can do about it. We're in a war, and oil is up. And energy affects the whole market. So if energy affects the whole market and there's a disruption in energy, then the whole market is gonna get affected. It's simple. It's not that hard. Um, a correction is not a bad thing unless you are a retired person and you are making income out of your portfolio, and then a correction is a big hit for you, which is something you don't want to happen, especially if you're retired and you're at home and the market is in a correction. That means your retirement fund or whatever investment that you are in is in correction territory. You're losing money. Not a good thing to hear. But if you're a new investor, if you're a continuing investor, correction markets is the best thing that will ever happen for you. A reset in the market is amazing because for us, a reset in the market means a time for reinvesting or a time for investing, because you should hold cash all the time so you can invest in corrections. And that's what we are all sitting on the sidelines for. Like I'm looking at some of this tickers today, some of these stocks today. I'm like, amazing. These are great opportunities to buy, and I want to get into it. I unfortunately for me sometimes I don't want to buy big chunks unless the stock has been beaten down real bad. And one of a stock that has been beaten down real bad is Robinhood right here, as you can see highlighted, to 65.98, which is $66. So I am buying some more. I bought 20 more shares of Robinhood today. 20. I those 20, I think I would sell if they get to 70 or 80. But right now I bought 20 shares. If it goes down some more, I'll buy another 20. I'll keep buying Robinhood in this low down territory until it begins to rebound back. I think this stock is going to do great, so I'll keep rebuying Robinhood. But as you can see, all my shares are down. Look, I'll go down the line. Like Palantir is down 3 point something percent. Palantir is down 3.5%. Robinhood is down 6.2%. Neo is down 4.5%. Path 3.71%. AT&T is actually not. You can see all these dividend stocks actually they normally would beat the market on a correction time because everybody knows that dividend stocks are kind of safe, so people kind of run to them when the market is in a correction because they will bring you recurring dividends, which is good. So AT&T is pretty safe, doing pretty good. Coca-Cola doing pretty good. They're all paying dividends. Apple is down 2%. Google is down to 2.5%. Tesla is down 3%. Um, all these stocks that I own are down. Amazon down 4%. Amazon, another great stock that is really down for the year. Not Robin, Restoration Hardware is down 0.1%. Rigetti is down 7.5%. UEC 1%. Everything is down. SCHD, 0.1%. SCHD actually have done pretty well this year. I think this if we get real into correction territory, this ETF will do pretty good. Atai Life Sciences, 3.3%. Oh no, 5.3%. And then RVR is down 9.8%. Let's say 10%, which is pretty good because it IPO'd at $25 and it was up quite significantly in the past 2 3 days. So it going down 10% is not shocking. Um, but officially the market is in the correction. So let's see how far down we can go. Okay. But keep some cash on the line and still keep that is when the market is in correction, that is what DCA is for. Okay, dollar cost averaging. That's why you buy that's why most of my stocks I buy $20 every day, $20 every day. That's what DCA, dollar cost averaging. That's what I do because I DCA, so I'm not scared when the market goes down or when the market goes up. I'm going to DCA all through, all throughout this correction time, and hopefully it stays in correction for a while so I can buy all what I want to buy before it starts to rebound, because I don't want it to rebound too fast and then I haven't bought all I need. So if it stays in correction for a while, I'm going to still buy. Real quick, this is just an overview of the market. I had Google AI do all the summary for me. US stocks tumbled on Friday to March 27, 2026, with the Dow Jones Industrial Average falling nearly 800 points and entering official correction territory. Yes. Heightened energy supply concerns due to the ongoing conflict in Iran and incidents in the Strait of Hormuz drove oil prices higher, further weighing on investment sentiment. So basically, that's it. The war going on having an impact in the energy sector, oil and gas. Strait of Hormuz is closed, so you all know that. Dow Jones Industrial Average, the DJI, is down 1.73%. The Dow is now down 10% from its recent closing high. 10%, that's a lot, meeting the technical definition of a market correction. S&P 500 is also down 1.67%. The index closed at a 7-month low. Remember that 7-month low, marking its fifth consecutive weekly decline, 5 weeks straight. The longest losing streak since 2002. Nasdaq down 2.15%. The tech-heavy index deepened its stay in the correction territory, now roughly 13% below its October peak. From October to now, 13% down. So we are actually in corrections. The Russell 2000 down 1.5%. Yeah, so 1.75%. What are the market drivers? Energy and inflation. Crude oil surged past $112 per barrel. So oil is 100. I think it was 113, 115 when I started doing this video. Dollars per barrel. Monetary policies. Investors are increasingly concerned that the Federal Reserve next move could be a rate hike rather than a cut driven by a mounting inflation risk. I mean, that's 50-50, and especially with Trump trying to change the what's his name? The Fed governor. I forgot his name right now. I just blanked out. With Trump trying to change him and bring a new Fed in, I think they are going to have a cut, no matter how inflation is, because they do want a cut. So tech sector mega cap stocks were primary drag, with Meta and Google sliding amid legal and regulatory pressures. That I don't care about. Those should right up. Meta is actually down significantly. So if you're a tech fan in that space, you want to buy some Meta. It's really down significantly, but I think it's going to do pretty good. So if you are a Meta, keep averaging. The rest I don't care about. AstraZeneca. The biopharmaceutical drug in London following positive result for a lung disease drug. So they went up 4%. Carnival shares fell. You know, Carnival shares fell. I think another 4%. So that I don't care about all these things. Gold prices jumped and all that. Crypto, Bitcoin also fell. Most of all these things are falling due to the correction market. And you can see my investment also came down pretty significantly, which is 3.6%. My week percentage is 2.3% down. My month, which is also significant drop, 4 point, let's say 5% down. 3 months, look at that, 22% down from here. So I've had a significant drop in my portfolio, which I'm not even perturbed about, because I rebalance my portfolio very, very nicely. And I'm just holding on to most of the stocks that I have in my portfolio. And I'm hoping for a rebound. And I know there's going to be a rebound. It's going to be a great rebound. And I love it. Year to date, look at that, 21%. But if you go to the past year, I'm up 24%. And if you go to my all time, I'm up 122%. So significantly, I'm doing pretty well. You can see my all-time high over here at 157, which I was up 229%, which was pretty good. But I knew that it was going to be a drop, because if you see this steep climb, you always hope for the drop. And I'm looking at the bottom of 82,000. If it gets here, that's I'll be fine with it. This 82,000, that's where my drag is. That's where, if I'm going to draw a line, you can see here 82,000. You can see here 82,000. If I'm going to draw a line, I'm going to draw a line through here, and then when it hits 82,000, I'll be hoping for a rebound. But for now, I'm looking at the market. I'm not really playing too much into it. I'm buying stocks that I think that are good, and Robinhood is one of the stocks that I bought today. I bought 20 shares. I bought it not in my investment account. I bought it in my trading account. So I'm holding. I bought 20. That's the significant thing that I did for Robinhood. Bought 20 shares in my trading account, because I'm buying it to sell. And then I bought a call on it. I think a $66 call on Robinhood for the future. So let's see what happens. And the market is down. Keep the faith. Don't panic. Dollar cost average. Remember that. This is your time to make money. This is your time to invest. So keep the faith and dollar cost average. Okay. Have a good day. Be safe and peace.